Okay, guys, let us have a look at a news trade.
Wait. Matron, take them away.
Hi guys, hope you're well. Big Scruff here, sitting next to little Winky. Now she's all excited because we've been away, we've had a jolly. So I didn't do anything yesterday, and we're not doing anything at the weekend because we're going away again. But I always like to sort of give the guys in the squad something, and I feel a little bit guilty because I've neglected them for the last 2 days because I had to spend all my time looking after the Winky. Except she didn't look after me.
Yes, I did.
You didn't. You spent all my money. See that? You didn't say a word, did you? Not a word.
No, I didn't spend it. You spent it, Donald.
You pointed and I had to pay for it. That's the way it works in this house. And we're going off to London on Sunday. And she said she wants to go to Oxford Street. I'll buy a Monopoly. Right. Talking of Monopoly. Let's have a look and see what's happened on the chart. Because she's sending me rocketing to the poorhouse, boys and girls. I'm rocketing down there. It's no good. It's not doing me psyche any good at all. In fact, I'm pulling my hair out.
What hair?
Well, I've already done it. I'll polish my head. Right. Charts. Okay. What's happened today is there's been news announcement. Like sort of a major US news that spikes the indices. Now the indices ripple through. So if you watch the S&P 500, you'll see that'll ripple down in the FTSE. It'll ripple down into the DAX. Why? Because they are tagged into the dollar. And how are they tagged into the dollar? Well, the DAX is closely correlated with the euro dollar. The FTSE is closely correlated with the pound dollar. Okay. So if there's a reaction in one, it's natural there's a reaction in another one. So if you can see these reactions, well, then they become good opportunities. And why is that? Well, look, if I strip all this back, because I'll do this with a clean chart, and I'll show you for why. We've had a massive acceleration here. So there is there. One single candle went up 105 in 5 minutes. Now, obviously, it can't sustain. So this is the collapse. But what's interesting about this, it's something that I've put up for the guys, because I do this all the time anyway, is I put on a bias sheet. Basically, it's what I'm looking at. So at 2 o'clock, it's currently 20 past 2. It was telling me it was a buy. It's a B grade, pretty good. It's also telling me to wait and fib. Now, what that means is all of the rules are kind of out of the window when you're using your normal oscillators and your moving averages, etc. It means the fib is your best friend. So it's the fib I'm going to pay attention to. And that's why I'm going to use a clean chart, because it'll guide the way for me. But it's also told me when I've done my sort of workings out that this thing is a buy. So the fib is now going to give me entry for a continuation. Now with the guys, we do chat all the time. Yes, there is offers on this week for one-to-ones. Black Friday, 25% off. So good with that. But as you can see, the guys have a good old chat about what's going on. Oh, what's that bugger? I mean, don't worry, Danny. I'll catch up with you when I'm in London. But we're coming through. There I am. I have to come home, and they were missing me. But don't worry. We're back to normal tomorrow, boys and girls. Back to normal, and that means we have our face-to-face meetings, which is this, where we genuinely get into it. So if you like trading and you want to be involved, this is a good community. So anyway, let's put my self-promotion to one side Well, you've got to stick the old plug in, haven't you? I mean, if there's any sponsors out there, I am available to put it on my t-shirt. Right, let's have a look. Sorry about that. Oh, I'm all excited today. It's Joanne's birthday at the weekend, and we've had a great time. And it's lovely sometimes just to switch off. I did a video recently about knowing when to walk away, and it was the right thing to do, because I genuinely feel happy, whereas last week, not so much. And trading can do that to you. Trading can be an absolute roller coaster, and it's not something you want to be caught in. So let's have a look at this. If we go right out to the daily, you can see this is on a colossal move up, giving you the idea that this thing is moving. But markets oscillate throughout the day. They genuinely do. So you have to be able to understand the tops and bottoms of the markets. And if you can't, then you're in a problem. Now, this is the hourly chart. If I just pull this across, you can see it's been up. It's now breached the high, and it's coming down into this cluster here, this movement. Excellent. So you can start building up things from this. So just on that hourly, if we go up fib to fib, well, lo and behold, it's come to the 50% of the move, and it's stalling. So just put that there, just so I want to see what the pivot point is. So if that's there, well, the upper section is there, and the lower section is there, right? So we're now caught in a zone. So it's either going to bounce off here and move up, or it's going to come down here and move up. But we know the 50 is a key pivotal point. It really is. So the fact that this is struggling on this level on an hourly chart is a good indication that I'm probably right. So let's take this down into 15 minutes so we can take this a little bit further. Now I'm going to get rid of that. And I'm going to re-look at this on a 15-minute chart. So there you are. You can see the struggling. It is failing. So we have a good opportunity to here, but I think this is pretty darn good at this moment in time. But there is still decent amount of pressure, so you've got to be a bit careful. So if I'm ordering, I'm going to be putting my orders above this to move up. But let's look at the 5 minute, because this is the driver. This is the one. So if we're looking at a single candle, which is this one here, what we are seeing is now expansion points. Now I'm going to put these in purple just so that I can highlight them, or I'll put them in black or something. I'll put them in black just for argument's sake. Right. And I'm going to build up this entire chart. Now, if you look, the fibs are starting to line up with each other. All the way up to there. And then I'm going to put a solid black line on the top and the bottom, so I can see where they are. All right, so I know that's the bottom of the move. And that's the top of the move. All right. So what we've done here, we've created an arena. I don't really want it to go past that. Okay. Get rid of this. Right. Now, just to the average observer, this doesn't look a lot. But it actually does, because look, we've got key entry points, and you can see it's struggling here, where these fibs are aligning. Now, if I just drop this back to 15 minutes, I'll show you something. That is the entire move. Okay. We can see it. All right. But look where the 161 lines up. Perfect. Look where the 127 lines up. Perfect. All the way through. You come back this out to an hourly just so you can start looking at these things. And you start thinking, oh, hold on a second, this looks all right. This doesn't look too bad at all. So go back to the 15, pull this across. There's the entire move. Fib back on. So from the baseline all the way up there. This is the 15-minute based off that single 5-minute. Look how they marry up. Fantastic. There's the black on that 23. There's the 38 here. 50, 61. Now look at the stall points of each one of them. They all marry up. Right? So we're going to watch this on a 5-minute. That's all I want to watch it on. And I'm going to use the 5-minute candles as entry exit points. So I took a fib off that single candle here. And all of this lot, the black, were marrying up with a fib that was bigger. So fibs are incredibly important. Now all I have to do is figure out how to read this thing and what I want. Well, you can see this is starting to push up. If I do a candle count, 1, 2, 3, 4, 5, well, sure enough, that's about right. So if I drop an order in for a buy, and we're going to have it kind of up above it. Now what I can do is I can rack and stack this as well. So I'll do that. So just drop this into here. So I'm going to drop that onto there. So that's giving me my levels. Oh, there we go. Rocking in now. So let's get these in pretty quick. Bear with me, guys. Bear with me. Okay, and I've got one more to go in. Stack. Okay. Right, first one's out already. Happy days. That there, leave that there. I need to drop that back in. 5. Done. Okay. Right, guys. So what I've done is I've looked at the big market, big picture, and I've decided the overall velocity is to the upper side. Okay. So what I'm looking for is buys. Now, in this instance, I could have easily have looked for the retracement back to the 50%, but that's going against the trend. And because I haven't really had a lot of time to analyze the chart too much, because, well, I've had a jolly, so I haven't really been in tune with it. I wanted to have the odds in my favor. Well, if that's the case, I'm going with the bigger trend, and then I'm going to use the fib to map out entry and exit points based on a framework, which is a high, which is the high of this point, a low, and then extensions. So as long as this price operates between this line here, where it's currently at, I don't really want it to breach the base, but I'm happy to start buying here and here, and then I'll make a decision sometime down here somewhere as to what I'm going to do with it, you know. So what you're doing is you're lessening the load all the time, because if I go 10 quid a point here straight away, I've got nowhere to go. Now I can start setting up a bunch of orders down here, which I'm going to do. And it'll be on this black line here. But what I'm going to do is I'm going to let the candle come down a little bit because I want it to come up into this trade. And then catch it going the other way. Simple premise, guys. Simple premise. And if it comes down here, I'll put another bunch of orders here. So basically, I'm stacking here, I'm stacking here, and I'm stacking here. And then once it comes down into this bottom arena, let me just highlight that. This is kind of my area of pain. I don't really want to be too much in there. So I need to put some orders in this now. Bear with me. I'm gonna do that now. Put it out the way. So start these at a 10. Okay. So it wants to be there-ish. Oops. Okay. Just a second, because we're pretty close to the price. I might have to delete that. Oh, we're in. All right. Bollocks. Okay, not to worry. I'll that's pretty much on the money. Okay. So what's that? Okay. All right. So I'm racked and stacked. Not overly worried at this moment in time if it pushes down. Not a big issue. And I'm going to put another stack here, just on the top of this red. Okay, which I'm going to put in now. Just there. Right. So bear with me. These are my reserves. These are 4. These will get me out of trouble. Two, three, 1. That's it. Okay. Excellent. All right. So what these do, all right, and it looks really mental, this, but it's meant to. Basically, you're breaking up your orders and you're putting them backwards. So it looks lots of red, but they're just little. They're just small orders. You know, so it's 5 here and 10 there and what have you. So it's not end of world stuff, but it means it'll self-manage, or if I'm watching it, which I am, it'll give me the ability to manage the trade as well. In other words, I can shut some off, add into it, do all sorts of different things without really affecting the main trade. And the main trade is pushing up. So what's the premise? Well, just as I said, the main direction is to the upside. What we're looking at the moment is profit taking and opposing positions. That's it. but it often doesn't go against the main trend. All right. So you've heard the old saying, the trend is your friend till the bend at the end. Well, at the minute, the trend for this is still up. There's no real sign of that bend at the end. So I want to align myself with that. I want to swim with the current. But markets do move backwards and forwards. So I look at it in what I call a market neutral situation. In other words, I'm not going to buy the top of the market. I'll wait for the thing to pull back and then I'll buy into it. And then off we go. And because none of us have a crystal ball, we can't get in at the perfect time. So then I just use my orders to help get in at better pricing by, well, breaking it up. Now, I do get a lot of flack because of the way I do it, which is fine. You know, you want to go 100% to market and sweat it out, crack on. I don't like that. I don't mind looking at the red as long as I've planned it. And this helps me and it helps my psyche. So let me run the trade and I'll come back to you at the end. Okay, guys, looks like we come to the end of this trade. Look, end of this trade.
Excellent.
I wasn't going to trade today. I've had to make money to pay for you. What have you got to say for yourself? Nothing.
No.
Go get your keeney on.
Just remember we're Christmas shopping next weekend.
No, we're not.
No.
We're not. Sorry, boys and girls, but she's getting on my nerves. She's been battering at me all afternoon while I said I wasn't going to work today, and I have. But I made some money, and it's risk-free, and I'll tell you what I'm going to do. It's coming into target right now. It's a pip away. It's all we've got running, so we're just going to kill it off. Pop. That's it done. Should have no orders left. No orders left. 258 quid. Price bouncing off a fib. And that's what this is all about. This bit. Right. Are you happy now?
I'm always happy.
Are you?
Yeah.
Well, you're not getting it. It's my hard bit. And I did the right thing to pull it when I did because it's come down. Now, if I want to be daft, I can keep going back to the market because we've still got a good few hours left. And it's stalling down on here. So I can let it come back to there. Re-enter, go back. Re-enter, go back. Simple stuff, guys. And this is what trading is. Look at the big picture. How big is it, the market going to be? Well, it's very simple. Look at your ATR. So your ATR will give you the range of the market. What's the direction between the ATRs? Okay, so if you've got an upper bound and a bound, and the price is dominantly up, but you've still got enough room to get to the top of the ATR, well, then it's a fair bet it's still going to keep going that way. So that was the premise of this. But then we had the new spike at 130. And that new spike threw the market. Now, when it throws the market in such a way, there has to be a reaction. And that reaction is taking profits, people caught on the wrong side of it and stops being hit, and also opposing positions. So it creates some volatility, which naturally retraces. Now, as it retraces back, if you've got a fib lined on, suddenly you've got all these levels that are perfect to enter on. So you don't have to look for X marks the spot. You just go, right, I'm going to buy at this level. Oh, that's not the right level. Okay, I'll buy at the one below it. Oh, it's going a bit more than that. Okay, I'll buy the one below it. Fair enough. and it'll find its level and then bounce forward and carry on with the dominant trend, which is up. So what you've done is you've used that retracement to just time your entry a bit better. None of us is perfect. You know, I mean, to try and catch tops and bottoms is very difficult. But if you've got a framework and then build into it gently, in other words, I could quite easily have just gone 100% on the first position, and then I'd have been sitting in a lot of pain, waiting for it to come back, which it did. But I don't like that. I prefer to build backwards. And then if the one at the bottom gets back to where it started from and has paid me enough money, I don't have to wait any longer. I can kill the trade off. And that's what gives you consistency, guys. Common sense to the trade. So I hope that helps. What you find on this channel is it is chaotic because I don't script anything. It's always guerrilla style. In other words, it's just me doing my job and sort of, well, you get the ramblings of a madman, if you want to call it that, and sort of the wicked witch of the East here who's bloody bankrupted me this weekend. But it's raw and it's in the moment, and it'll always be in the moment. I don't do rollback charts, and I show you top to bottom what I'm doing. Simple stuff. So happy days. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.